Morning folks, and welcome to today's episode called The Gold Ring Scandal of 1869. And this, I promise you, is one of the most audacious, just jaw-dropping financial schemes that I've ever come across. Two young outsiders initially taking on and beating Cornelius Vanderbilt, the richest man in America at that time. And then, on the back of their success, they attempt to corner the gold market. It has everything: political corruption, backroom deals in Albany, a siege in New Jersey, backstabbing, betrayal, and the first Black Friday ever in 1869 when the markets crashed and Wall Street just descended into chaos. This is a cracking story. Enjoy. So the whole story revolves around two young, ambitious and very ruthless men, Jim Fisk and Jay Gould. And before we get to the gold part of the story, we have to first look at who these two men were and how they were able to finance the scheme to corner the gold market. So let's go back to 1864 first. We've Jim Fisk. He's just 29 years old, originally from Vermont, and he made money on union contracts and illicit cotton runs, and then lost it all in bad speculations. So he heads up to New York and is taken under the wing of Daniel Drew, who sets him up as a stockbroker. Now, Drew himself, very interesting character. He's an eccentric who made his first fortune as a cattle drover, walking herds of beef cattle from upstate New York to Manhattan in the early 19th century. And he gained a reputation for very shady business behaviour. He was a major participant in many Wall Street manipulations in the 1850s and 60s, and he's credited with perfecting the short selling of stock and introducing the concept of watered stock. In effect, this is where you issue large amounts of new shares without any real increase in assets or profits. So on paper, the company looks bigger and more valuable, but in reality, nothing has changed. Now, the second main protagonist in this story is Jay Gould. And this guy is somebody I am definitely going to be doing more episodes on, because he goes on to become one of the big robber barons of the Gilded Age. He was born in 1836 and grew up on a small farm in Roxbury in New York and worked as a surveyor. He was very careful, very calculating, and during the war he speculates on small railroads, and in 1863 he takes control of some failing lines. He reorganises them, and this becomes his pattern: buys distressed assets, turns them around quickly. So by 1865, the war ends, speculation explodes. Gould and Fisk are looking for opportunities, and in 1866 they get one. So the Erie Railroad was controlled by Daniel Drew, Fisk's mentor, and it was one of the most important lines in the US. It ran from New York City to Lake Erie, and this was a vital east-west corridor for the grain and freight trade of the Midwest. But by 1866, Erie Railroad was in a mess. It was a sprawling network. It was badly managed. It was short on cash. And Cornelius Vanderbilt, the richest man in America who had made his fortune through ships and railroads, he wanted control of Erie to add to his vast holdings. So Drew realised that Vanderbilt was quietly buying up shares in Erie. So together with Gould and Fisk, he hit back by using that classic Wall Street weapon that he was so well versed in, watering stock. In other words, they simply issued lots of new shares, and in doing so, they diluted Vanderbilt's position. And it didn't just block Vanderbilt, it created chaos. Prices swung violently, and this allowed Drew, Fisk and Gould to profit by shorting the stock. Now, a brief explanation of short selling, I did cover it in a few other episodes, but it involves borrowing a security or shares whose price you think is going to fall and then selling it on the open market. You then buy back the same stock later, hopefully for a lower price than you had initially sold it for, return the borrowed stock to whomever you bought it from, and pocket the difference. And of course, because Drew, Fisk and Gould were diluting the shares, they knew its price was going to fall. Now, soon, of course, Vanderbilt cottoned on to what was happening. He turned to the courts. Injunctions were issued. Arrests were threatened. And if Drew, Gould and Fisk were legally restrained, Vanderbilt could freeze the share issuance and tighten his grip on the railroad. So Drew, Fisk and Gould, they do a runner. On the night of March 11, 1868, they ferried trunks of Erie's cash, around $6 million. That's about $120 million when adjusted for inflation, so a huge amount back then. And they also took the company's records to Jersey, out of New York's reach. And they hole up in Taylor's Hotel in New Jersey and fortified the building with hired muscle. I mean, this is brilliant stuff. And the siege becomes national news. Drew, he's aging, anxious, he's clutching his Bible in the hotel. Gould stays silent, planning the next step. And Fisk turns the whole event into theatre. You know, bright clothes, exaggerated swagger. One news correspondent calls him Jubilee Jim. And from the hotel they issue statements mocking New York law, insisting injunctions cannot cross the river to New Jersey. Vanderbilt responds with lawyers and political muscle. And Gould, he knows that to win, he needs a law that retroactively legalises all the watered stock already printed. If he gets that, Vanderbilt's injunctions collapse. It gives you an indication of the measure of Gould, that he is willing to take on Vanderbilt, who, is so much more wealthy. Gould heads to Albany, the state capital, carrying about $500,000 in cash in a leather satchel, and he sets up in the Delavan House Hotel. Open bar, liquor on every table, cash on demand. And crucially, Gould has in his corner William Boss Tweed, the influential Tammany Hall political boss, to run the Tammany side. And for context, Tammany Hall was New York's powerful democratic political machine. It was famous for patronage, vote buying, and institutionalised corruption. And conveniently, Boss Tweed is also made a director of the Erie Railroad. So Vanderbilt sends his own agents with bags of money to try and buy votes as well. And the result is one of the most brazen bidding wars in American political history. Lawmakers take bribes from both sides. One senator pockets $75,000 from Vanderbilt, then $100,000 from Gould, keeps both and votes with Gould. And remember, this is at a time when lawmakers only make a few $100s a year. And because of Boss Tweed's influence, Gould's network is stronger. And by mid-April 1868, a bill passes in their favour, legalising every one of the fraudulent Erie shares already printed. The moment it becomes law, Vanderbilt's position collapses, so he switches to damage control. Daniel Drew brokers a quiet meeting between the camps. Now, Gould's endgame is to own the railway, and he more or less has it, but they want Vanderbilt out of the way, so they agree to reimburse Vanderbilt for most of the money he spent buying Erie's watered stock, more than $7 million. In effect, Erie buys back the fraudulent shares. But this is a huge coup for Fisk and Gould, who are still in their early 30s. And then they show how ruthless they are by pushing Drew, Fisk's mentor, out of the Erie Railroad. And this is the start of what's called the Erie Ring. You have Gould, Fisk, Boss Tweed, and a circle of political allies. And the Erie Railway now, it stops functioning like a railroad company. It becomes this cash engine. Fisk diverts corporate money into political payoffs, Broadway productions, and his own entourage. Reporters call him the Prince of the Erie. Gould, quieter and more strategic, he's focusing on the financial engineering. And at the end of 1868, he quietly acquires control of the 10th National Bank of New York, and he puts Tweed on the board. And this gives them the financial capacity far beyond Erie Railroad and a platform for the next scheme. So now, it's 1869. The US financial system is stabilising after the Civil War, and flush with cash and emboldened, Gould sees an opportunity to corner the gold market by driving the premium up, by controlling the supply, make everyone else buy from him. But he realises that this only works if the federal government stays out of the way. Because if the Treasury releases its own gold into the market, the supply jumps and the price falls instantly. So Gould understands that the financial plan and the political plan are the same plan. He can only control gold if he can keep Washington from doing anything. And in June, he finds an opening. Abel Corbin. He's this minor speculator, but crucially, he's President Grant's brother-in-law. Gould flatters him, gives him profitable trades, and then sells him a story. Higher gold helps farmers. It boosts exports. It strengthens the country. Corbin buys into it immediately. He becomes the ring's lobbyist inside President Grant's orbit, and he arranges a private dinner between Gould and President Grant. At the dinner, Gould steers the conversation toward national finance. He's hoping that Grant will signal he won't push gold down. He doesn't get the assurance he's hoping for. In fact, Grant says that he'd be more inclined to burst any speculative bubbles and not indulge them. So next, Gould turns to the federal gold supply. When the assistant treasurer in New York resigns in June, the job goes to General Daniel Butterfield. He's this decorated Union officer. So Gould immediately courts him with investment offers. And crucially, Butterfield accepts a $10,000 loan from Gould. And while he later denies any corrupt arrangement, such a payment could only but put him in a compromising position. Throughout the summer, the ring quietly buys more gold. The price goes up. And by early September, with treasury sales paused and confidence rising, the corner begins to take shape. But it's a very delicate balancing act. They know if they push too hard, the treasury could crush them. So Gould pushes the scheme further. Earlier in August, President Grant had met privately with the editor of the New York Times and spoken about his views on the economy. And in the days that followed, the Times editorials, they closely mirrored Grant's outlook on the economy. And this gave Gould an idea. If Grant's outlook could shape editorial opinion once, maybe it could be nudged again, this time in a direction that suited him. This is just nuts, the things that they get up to. So the Gold Ring, they write an article titled Grant's Financial Policy, which claims the administration favours higher gold prices. To ensure the piece gets printed, Gould recruited an influential British financier with close ties to the editor of the New York Times, and he presents the article as the work of an insider who was, and I quote, in the intimate confidence of the president. It almost works, but at the very last moment, just before it goes to print, the financial editor thinks that the final paragraph feels a bit off. It's too bullish, it's too eager. So he cuts most of it and he prints a softened version. But even this tamer version still helps Gould because the public reads that Grant might hold off on selling gold. There's no explicit endorsement of a rising market, but there's enough of a hint. Enough for Gould and the ring to keep buying and for the markets to believe that the government won't be selling gold into the markets as they want to keep the price high. So between September 2nd and 6th, gold rises from the mid-130s to 137 and a quarter. And look, while that mightn't sound like much, back then the price of gold barely moved. Under the gold standard, governments fixed its value by law, so that removed the wild price swings we kind of associate with markets today. Now, it's got to be noted here that Gould is the master manipulator here. Fisk and Corbyn, they are actively involved, but they really only know what Gould wants them to know. But now Gould pulls Fisk fully into the centre of the scheme, but he does it by lying. He tells Fisk that the President, the First Lady, Mrs. Grant, and key Treasury officials were financially interested in their gold scheme and that there was an order not to sell gold. You see, he needs Fisk to fully believe this because now Fisk goes hell for leather to ensure they corner the market. On September 13th, the ring created a pooled fund called the National Gold Account, and using certified cheques from Gould's Bank, the 10th National Bank, they deployed 60 brokers to buy huge amounts of gold contracts. Then, on September 17th, Corbyn writes a letter to President Grant. It's a personal appeal urging Grant not to interfere, but it's framed entirely as a patriotic plea to protect Western farmers. There's nothing about the ring, there's nothing about their trades, just a plea for stability. And Fisk sends one of his most trusted men to deliver the letter to the President, and the courier tracks Grant to a quiet farm in Pennsylvania on Sunday, September 19th. He hands over the letter and asks if the President has a reply. Grant says, no answer. But the courier telegraphs back to Fisk, letters delivered all right. And Fisk interprets all right as approval. And so he continues to believe as if the President of the United States is on their side and is involved in this. And confidence inside the ring soars. But the ground is shifting. Because when President Grant got that letter, he thought it was suspicious and he smelt a rat. So that evening he asked his wife, the First Lady, to write a letter to her sister, who of course is married to Corbyn, And the letter conveys that the president is very much distressed by the rumours he's hearing of speculators attempting to corner the gold market. And it warns that if Corbyn is involved in the scheme, that he needs to get out of it. And when that letter from the First Lady reaches the Corbyns, Corbyn, of course, panics. He summons Gould to his library near midnight, and the scene becomes one of the most defining moments of the affair. Corbyn is reading the letter with Gould hovering over his shoulder, and the meaning of the letter, it's very clear. President Grant is warning them off. Corbyn goes pale and says to Gould, "If this becomes known, I am a ruined man." Now, throughout that very day, the 10th National Bank certifies roughly $25 million in cheques for the ring. Gold hits 140.5. The ring now controls about 50 or 60 million in contracts, and this figure, it intimidates every short seller in the market. They're unaware, of course, of the letter that Corbyn and Gould have just received. So as far as the short sellers are concerned, Washington isn't going to interfere, and that fear itself pushes gold even higher. The following morning, Gould and Corbyn meet again. It's not clear exactly what happens at this meeting because they both tell different versions. But it would appear that Corbyn wanted out and Gould offered him $100,000 to ensure that, first of all, Corbyn wouldn't tell the president or any official about the scheme, and that secondly, he wouldn't tell Fisk or anyone in the gold ring about the letter. And this gave Gould some breathing room. Yes, he knew the game was up, that the president was aware of their scheme, that the Treasury would most likely get involved. But crucially, neither his co-conspirators nor the market knew this yet. Now that night, the ring maps out their final push. Brokers gather. Fisk, who of course believes that he has the president and the Treasury on his side, boasts that the ring controls $110 million in calls. I mean, he's massively exaggerating. He also convinces his brokers that gold will hit 160, and he swaggers, and the confidence that he brings, it serves its purpose, because if brokers believe the ring can overpower every seller, then short sellers will panic and prices will just keep moving upwards. Friday, September 24th, 1869, and it's a morning that's filled with tension. Gould and Fisk, they rode downtown to their headquarters where guards had been stationed at the doors because rival traders and angry speculators were gathering. When trading opened, Fisk ordered, "Buy everything at 145 or under." Gold stood at 143.5. It went up to 145. The next order, "Take it to 150. By 10:30 it was there. Each time it hit its mark, Fisk demanded more. It went to 155, then 160, then 162. Like, this was a full-scale short squeeze, in that rising prices were forcing short sellers to buy back gold at any price to limit their losses, which only drove prices even higher. The New York Times described the scene. Strong men fell senseless. Others raved in the agony of despair. It was as though hell had broken loose. And Fisk, strode through the chaos. As if staging a performance, he was in his pomp, believing that everything was going exactly as planned. Meanwhile, Gould was sitting there, very still, barely speaking. There were subtle nods. Yes, he was buying, but only very small amounts, as a show, because at the same time, he was secretly and very quietly selling off his gold holdings at the very peak through his own agents, while Fisk's brokers kept buying. Gould was effectively unloading into the frenzy he had engineered. As he later admitted, "I was a seller of gold that day. I purchased merely enough to make believe I was a bull." Because Gould knew at some stage the government would step in, either directly or indirectly, and he was right. By late morning, gold was at 163.5, and at the very height of this frenzy, James Brown of Brown Brothers, one of the most respected bankers on Wall Street, who handled government bond placements and had regular contact with federal financial authorities, he stepped forward and offered to sell $1 million worth of gold at 162. So here was a very credible and very large seller entering the market that the ring had convinced everyone was almost sold out. And before that bombshell could even register, Brown coolly offered another $1 million at 161, and then $5 million at 160. Now, the question I had at this stage, where was Brown getting the gold to sell? Like, didn't the ring have the market virtually cornered by now? Well, no. They didn't. Yes, they had bought massive amounts of gold contracts, but that's not the same as owning physical gold. And Brown Brothers and Co. was one of the few firms in New York with deep, reliable access to actual gold reserves. And then, minutes later, came a telegram from Washington announcing the Treasury would sell $4 million of gold immediately. And that was it. The crash was instant. Gold plunged from 160 to 133 in 15 minutes. The tables had been totally turned. Margin calls went out en masse because, of course, as well as Fisk and his gold ring, there were lots of other speculators who had jumped on the bandwagon, believing that prices would keep climbing. Those who couldn't meet them went under. Stock prices on the stock exchange, they collapsed as leveraged investors dumped other stocks to cover their gold losses. Exchange officials closed the gold market, and the day became America's first ever Black Friday. Now, Gould and Fisk, they barricaded themselves inside the Erie offices as furious traders searched for them. Inside, Fisk was enraged and he angrily confronted Corbyn because in his mind, Corbyn was the link to President Grant. And Fisk was stuck with tens of millions in gold purchased at 150 to 160 that was now worth at least 20% less. Gould, as usual, stayed silent because unbeknownst to Fisk and Corbyn and almost everyone else at that time, he offloaded most of his gold near the top. Now across the country, credit markets just convulsed. Farmers who'd hoped high gold prices would help crop prices watched the grain price fall. Trade froze. Banks hoarded cash. And of course, it should come as no surprise to see what Fisk and the gold ring did next. Up to $70 million of their trades were done through a brokerage firm that had effectively acted as a straw man. This brokerage's name was on most of the trades undertaken by the ring. So the ring just repudiated all these trades, saying it had nothing to do with them. $70 million in contracts vanished because, in an age where protections barely existed, the counterparties were left with nothing, very little recourse. But, of course, they tried the law. The lawsuits came quickly, but the judges, aligned to Tammany Hall, and obviously bribed to the hilt, protected the ring. Injunctions blocked attempts to seize Gould's or Fisk's assets. No criminal charges were filed. Then came the political fallout. In January 1870, Congress opened a formal inquiry. Gould, under questioning, insisted he had broken no law and framed his actions as pure economic logic. Fisk, of course, played the showman, loudly shifting blame. Democrats tried to tie Grant to the scheme, even hinting that the First Lady had received a suspicious package containing $25,000 during the spike in prices. Turned out the suspicious package was just $25. And the committee ended up clearing President Grant. They found that Corbyn's behaviour was reprehensible, but there was no evidence the president had anything to do with the ring. And Grant's order to sell $4 million in gold on Black Friday, that was taken of evidence of his independence, and he was also credited for acting fast enough to stop a deeper collapse. The press had its own verdict. Satirical cartoons mocked Wall Street. Commentators cast Gould and Fisk as robber barons. Henry Adams published a fierce essay blaming Wall Street, Tammany Hall, and the very, very loose ethics of the era. In terms of the personal fallout, it was uneven. Corbyn suffered the worst disgrace. Grant cut him off, society did too, and he ended up humiliated and socially exiled. Now, it's fair to say that Jim Fisk had a pretty thick skin. He swaggered through the crash, claiming victory, boasting he'd escaped his gold obligations through sheer defiance. But the court cases piled up, and the sense grew that he'd been half partner, half dupe to Gould, and that seems about right. Then on January 6th, 1872, at the age of 36, he was shot dead on the staircase of New York's Grand Central Hotel. The guy who shot him was a former associate who was romantically involved with Fisk's mistress and who had also, surprise, surprise, been swindled by Fisk in a business deal. But what of the real brains behind the great gold ring? Well, Jay Gould, he was bruised, but still standing. Like within months, he was back running the Erie Railroad, speculating again, rebuilding his position. And through the 1870s and 1880s, his wealth and power grew massively. As you'd expect, there was Constant litigation, hostile investigations, and regulators shadowed almost every deal he touched. And while the gold ring scandal definitely blackened his name, it didn't slow him down. When he died in 1892, he was the fourth richest man in America, behind Rockefeller, Carnegie, and Vanderbilt. He is a fascinating character, and I'll definitely be doing more episodes on him. Overall, this was such a rollicking story. I'm not going to overanalyze it. I just couldn't believe the shenanigans these guys pulled. And it's not just the fact that they did so many underhand, double-crossing stuff. It's also that they were able to get away with it. It shows how corrupt everything was back then. But that's understandable. I mean, it was all new. The government, Wall Street, everyone was only feeling their way. And it takes time and plenty of mistakes to ensure that the right regulations and processes are put in place. And look, we're still not there. You're always going to have Jay Goulds and Jim Fisks out there who are looking for loopholes in the system, people they can exploit. But in fairness, I'm grateful because these kind of people provide such a rich source for these types of great business stories. And that brings us to listeners' emails. And this one is from Mark. And Mark would love to know whatever happened to Skype. Well, you and me both, Mark. That is a brilliant suggestion for a story, and I didn't actually have it on my list. So thanks for listening and for the suggestion, Mark. And remember, if you have any comments, any corrections, or any story you'd like me to cover, email me at info@gbspod.com. All the best, folks.